Hello traders and welcome to another video review. Today is Wednesday, March 15th, 2023. Let's find out what's going on the Forex calendar today. So what do we have here? Oh, plenty of very important data releases. We even have the industrial production data from China overnight. Very nice reading, 2.4%. Better than the last reading of 1.3%. However, still below the forecast of 2.6%. Just a slight miss here. Nevertheless, pretty good reading from China. So we are going to find out what is the Aussie, for example, is doing after this data were published. During the London session, we got spring forecast statement from the UK, and that's the most important event during this session. Nevertheless, the New York session is full of very important data release. First, most important is the Fed interest rate decision today at 8 o'clock. Before that, we got core retail sales, PPI, producer price index, and retail sales data scheduled for release at 1:30. Then we got annual budget release from the UK scheduled for release 1:30. Then we have crude oil inventories for all of you crude oil traders, 3:30. CPI data from Israel, not that much relevant. And of course, then Fed interest rate decision, 8 o'clock. And GDP data from the New Zealand. The GDP in New Zealand for the fourth quarter is expected to drop from 2% to minus 0.2%, which is very interesting. And it would be wise to keep an eye on the New Zealand dollar behavior after this data is published. So because of the Fed interest rate decision, let's find out what the US dollar is doing, what the indices are doing, and what gold is doing ahead of this situation. We are going to start with the US dollar index. This is a 4-hour chart. Let me switch to the daily, but before I do that, you can clearly see that on the lower time frames there is a cross. It's almost a cross of 50 and 100 periods moving average. So basically right now, after the local high, sorry, this is even swing high. The swing high was made at 105.85. Right now we have a drop and we are trading below the trend line. So let me just take a look. What is the actual drop? How many percent? This is roughly about 2.27%. So right now this might be considered as a very nice correction. However, we are below the 4-hour time frame and moving averages, trying to establish some kind of a ground around 103.41 level. If we switch to daily, we can see clearly that the recent movement to the upside was nice in the terms of the range. We hit the technical resistance located at 104.61 and we broke it because the local high is again 105.85. Nevertheless, this is the area very close to the 100 days moving average. Okay, so right now we broke above it just a little bit and then moved back below the key short-term technical resistance. Right now it used to be support 104.06. now it's the resistance and we sit just at the 50 periods moving average here for 3 days. So basically the market participants are waiting for the Fed interest rate decision, if they will surprise the markets or basically not. The momentum is very low. The momentum is at the level of 46. It's below the level of 50. So generally kind of a bearish skew might be considered here, bearish bias might be considered here, but please keep an eye on the US dollar index, keep an eye on the current market behavior, because it looks like the interest rate decision might be a trigger for a bigger move for the US dollar index. It might go lower, it might go higher. It all depends on the decision and the market reaction on this decision. Whether the market participants will be surprised, or maybe they will positively or negatively, of course. So that's the US dollar index. If we take a look, let's say, okay, euro dollar, if the US dollar index is going down, the euro is bounces higher. So this is a daily time frame chart of the euro dollar, and you can see we tested the 100 days moving average. We bounced it first day, second day, third day, fourth day. We are trading around the 50 days moving average, just like it is right now on the US dollar index, is bouncing around, bouncing from the 50 days moving average as well. So right now we are waiting for the situation to be much more clear. The key technical resistance to the upside on euro dollar is 1.0802. So the market participants await the Fed decision to trigger the movement to the upside or to the downside. Of course, we don't know that much yet. Nevertheless, it still looks much more bullish to me than bearish, because the 100 days moving average provided the support, and there's a very nice bounce. So momentum is positive. We might continue toward 1.802 or even break out towards the recent highs. It all depends again on the Fed interest rate decision. If Fed hikes more than 0.25%, the market will of course drop lower. So that's the euro dollar. Let's take a look at the S&P 500, and this market is not that clear, is not that biased towards one of the directions. We have the technical support from the end of the last year, 3,763, and we have the local lows and the yearly lows and the swing lows, highs of course, at 4,195. So this is the high from the 2nd of the February. So there is still kind of a range here during the first quarter of the 2023. There is no decisive breakout. The market is going from the extremely overbought market conditions to oversold market conditions, going up and down, basically without any strong direction. So this time the situation might repeat again, basically, because this market is right now, as you can see, in our area below 150 moving averages. The local low was made at 3,809, and a slight bounce was made here. But you see, there is still no decision here. There is no decision regarding the fact that the market should go up or down. Okay, so moreover we trade below this short-term trend line as well. So that's my short-term trend line. We still trade below this line. So we need a breakout. We need a breakout higher above this line if we even want to do something like that. That's not really correct. So let's just leave it the first line here. We need a breakout in order to go higher on the S&P 500. Gold. What is gold doing? Very nice rally on gold. Very nice rally on gold. We are keep moving higher. We broke above the key short-term technical resistance located at 1,900. New low was made at, high was made at 1,914. We got the tweezer top, so we need a pullback, and we are approaching 50 days moving average. Okay, 1,874, and there is some kind of a bounce expected from the gold, because we need to test, of course, and break above $1,959. This is the swing high from the 2nd of the February 2023. Momentum is positive, momentum is strong. So if the Fed decision will be in line with the expectations, we might see another leg up on gold, leg down on the US dollar index, leg up on the euro dollar, and leg down on the S&P 500, at least towards some sort of the moving averages or maybe technical resistances or supports. Okay, so please keep an eye on today's market behavior. It might not move for the whole day until the Fed interest rate decision. So please stay focused, stay vigilant, because it looks like the biggest move is still ahead of us, and plenty of the things might get resolved today after the trigger, most likely from the data of the US economy, and then from the Jerome Powell interest rate decision made, of course, as a head of the American Fed. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.